Well, hello there, Maverick Traders. This is Rob Reinhold again, and this is the Trading Room, and look at that date. I cannot believe that this year is half over. So the first half is in the books. Let's look ahead to the next half. In this session, we're going to talk about what happened last week, look at some of the news. We're going to always rescore the market, making sure that we are throwing away our biases and looking at things in a new way. And we've got some slots to fill, so we've got some longs, some shorts, and some sideways today.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's get ready for the week.
This week was a pretty boring week. Now, summer comes along and we typically get some drops in some activity, and that's exactly what we saw this week. We saw low volatility and we saw this big failed breakout on Friday. Now, what that tells me is that this market does not have enough energy yet to break out to any one direction. I think this is a clear sign that we are in for some consolidation. And if we take a look at the market breadth, this week, we pretty much had a 50-50 advanced decline line, and right now 50% of stocks are above and 50% are below the 50-day moving average. Now, I want to really keep this in perspective to where we were just a couple weeks ago. We were at higher levels. And so we've been having this pullback, and if you take a look at the charts, and we'll take a look at the charts, it's going to look more like a base, but I want everyone to understand that we've had some pressure taken out of this market to where we are again consolidating for potentially another big run. The economic growth is okay. We had some economic numbers, and we'll take a look at them, and you can see that they were just okay this week. So first thing we want to go over is some housing numbers. Housing numbers were not all that great with new home sales, and we also had pending home sales. So those weren't great. What was good was we had good durable goods orders, the headline number. We had good PMI, and we also had good consumer sentiment. This is exactly where the market wants the economy to be. And not too strong, not too hot, not too cold, just right in the middle. And this is, again, a meter, and we always use this meter to talk about sentiment in the market. And right now, think about where everyone is. No one thinks this is a great economy, and no one thinks this is a great market. But there's also no one thinking it's a terrible market. We're just right somewhere in here. I mean, we were just right in this area of just a little bit bullish, maybe more neutral and sideways. Look, we can work within that. We just have to put the right trades on. So let's take a look at the markets and let's look at the numbers from last week, and let's really focus on the charts going forward. If you take a look at the Dow and the S&P, you can see they were flat. Basically flat for the week. The Qs went down a little bit. Now, this was really due to Friday's selling. There was a little bit more selling in technology than there was in anything else. Look at the Russell. Russell up 1.2%. Very nice week for the Russell. Oil was up. Energy was the strongest sector. And gold flat. And if we take a look at the S&P chart, just take a look and see what happened this week. So we had that pullback late part of last week, early this week. And then we got these candles. Now look at these candles, very narrow candles. Very, very narrow, but opening near the low, closing near the high. This was genuinely bullish, but just these candles are really small, telling you there's not a lot of activity. On Friday, we got the PCE numbers, and they were just as expected. And you can see at one point, the market was up looking like it was going to break out of this high base pattern that we've been forming. However, by the end of the day, it failed spectacularly and was a pretty nasty candle. So what this is now telling me is that the market does not have the energy to break out yet. It needs to build more energy. It tried and failed, so we are just back into ranges of consolidation. I think that's all you can take a look at this market and say, look, yes, this was a nasty candle on Friday, but when you take a look at the whole picture of a chart, that's all it was one candle. There is nothing that anyone should take from this candle and say that, oh, that was the top, we're going lower. If If we go over here to the NASDAQ, same thing. The NASDAQ looked like it wanted to break out at one point. We had a nice green candle here, but by the end of the day, it faded. And now we just have to say we're likely in this high base. We're likely in a high base. As you can see, we could go down a little bit more. I would not be surprised if maybe the first day or two of this next week we go down a little bit. But there's nothing in these charts that say be bearish. But let me just say this. There's nothing in these charts that say be wildly bullish. We have to trade the market in front of us, and the market in front of us is saying it is a bullish market that is in a consolidation phase. We come over here to the heat map. Again, there's nothing here that tells us anything. Half of the large cap tech was up, half was down. You know, you've got red and green all over the place. This is, again, a sign of more consolidation. This week, I'm looking at this market thinking, okay, if we couldn't break out on Friday with a good PCE inflation report, what makes me think we're going to break out next week? There is a holiday next week. The markets are going to be closed on Thursday, which is a weird day. So again, we got Monday, Tuesday, Wednesday, markets closed on Thursday, and then we have one day on Friday. There's no reason for me to believe that this is going to be the week that we break out. And in fact, I think this is the week where we build more energy in consolidation. So maybe next week we have the ability to break out and run higher. The markets are saying that they want to go higher. It's just not saying they want to do it right now. They're in no hurry during this summer. We do have some pretty big economic news next week, with it being the first week of the month. So we always get manufacturing numbers on Monday and on Wednesday. ISM and ISM services. We also get the JOLTS numbers and Chairman Powell speaking on Tuesday. And then we have the employment report on Friday. I don't expect there to be anything other than what we've seen over the last month or two. Some numbers good, some numbers bad, but overall a decent economy. I think that's what we're going to get, and I really don't think that there's going to be much surprise to many of these numbers, because it's very clear where we are in the market cycles and the economic cycles. So we have to score this market, and we have to score this on a technical basis. It is still a +3. Now we use the 20, the 50-day moving averages, and we also use the slope of those moving averages. All three of those are showing green lights, so it's telling us we want to lean to the bullish side. But I always do a weekly outlook to really talk about, okay, for the month, we are still a +3, but a weekly, I'm down to like a 0 to a +1 for this week. I just don't see this week being much of anything at all. I see it being maybe a grind higher, but that is about it. So let's go in and take a look at some sectors. We did not have a lot of movement in sectors this week either. If we take a look at what was the best sector, we see that energy was the best sector of 1.5%. Guess what? It's been the worst sector for a while. Oil had a little pop. It jumped up. Definitely not getting too excited about that. Worst sector, utilities. Now this has been something that has been a clear trend. Utilities are going lower, and they've been weakening and weakening and weakening. Comms services, the second strongest sector, this has been on the top of the list for a long time, and you can see it keeps delivering. Everything else we know was basically down a little bit or flat a little bit. Let's take a look at each sector one by one and give it a score. And this is what I was talking about with the utilities. The utility sector has just been sliding. As you can see here, there's been hardly any bounces. Every bounce has been sold into. So we went from a +3 to a +2 to a +1 to a 0. We've been a 0 over the last about 2 weeks. And you can see we are clearly now below the 20, below the 50-day moving average. So utilities is going to get a downgrade to a -2. Coming over here to comm services. Check out comm services. It had a great week this week, even in spite of Friday's horrible candle. I mean, this is a pretty nasty candle, but if you take a look at it for the week, man, that's a great week. We broke out of some resistance here. Boy, that is just a really solid week for comm services. Okay, we might get another day or two of selling, but comm services remains at a +3. Coming over here to real estate. Real estate was a +2 last week. Okay, we're going to bump it down to a +1. Again, it's mildly bullish at this point. Nothing to get too excited about. Coming over here to healthcare. Healthcare was at a +1 last week, and it remains at a +1. Again, it's sitting there. It's not weak, but it's not moving higher. So we just have to recognize where we are in these sectors. Industrials was a 0 last week. I'm going to leave it at a 0. If you take a look at Friday's candle, usually when we're right at moving averages, we do a 0. Okay, it closed a little lower. Look, Monday pops it right back up. I'm going to stay at a 0 here on industrials. And then we've got financials. They were at a +1 last week, and you can see they just sunk down after looking pretty good at the end of last week. Just could not have any follow through whatsoever. But again, the last 2 days have green up candles, telling you it doesn't really want to go lower as well. This was my favorite sector of last week. It was the consumer sector. It was flat for the week, but you can see the chart looks great on this. The chart looks great. We remain at a +3 on consumer. Here we have tech. Now tech, if we take a look at it just completely on technicals alone, we have to say it's above the 20, it's above the 50, and the slope of those lines are going higher. But as we go in and say, okay, well, what about, here was the last swing high. We failed even lower than that. So this is definitely making a lower high. If we get another red candle or two, that's going to be problematic on a technical basis. But until that happens, we have to stick with our rules. It is a +3. That being said, you don't have to do crazy bullish trades in technology. You can do mildly bullish. You can do some neutrals. You can do whatever you want as long as your slots are open. Next up is the material sector, and it weakened. We are at a -2 on the material sector. I think we were at a -2 last week anyway, but continued to weaken. I think you can see more weakness ahead on this one. Okay, and energy, we had a little bounce, but look at these candles. Yes, we went up, but it was all on Monday. It was all Monday's action. Really? These last 3 days, gap ups and falls, to me, this thing looks like a really nice bear rally to enter in some more shorts. I don't have any slots available for shorts, but if you do, I like the energy sector for shorts. So when we take a look and we stack them all up, here's the movement today. We got 3 stocks weakened, and we had 1 stock that strengthened a bit. We're looking for shorts in utilities and materials. We're looking for longs in consumer, tech, and comm services. But tech, I'm going to give it a little downgrade, even though it's still a +3. And then you got a whole bunch of stuff in the middle. This is where we are. Again, everything is mirroring what we're seeing in the price action, in the charts, is that we're in more of a consolidation than we are in a trend. So it tells me you got to really mirror what is going on in the market. Lots of sideways stuff, +1s, +2s are going to work great, and maybe a couple of -1s, and really probably just 1 -2 as far as that goes. So if we take a look at where we are allocated right now, here are our allocations. We have some slots available. Now, as you can see, we have 3 slots available in +2. Now look, remember, just because you have slots full, you don't have to fill them. I am definitely looking to fill this area. I want to fill this area more than this area. Why? Because my outlook is that the market isn't ready to move substantially higher. If that's the case, why don't I fill my mildly bullish and sideways stuff at the moment, and then as we get more confirmation, then I'll start to add on some more bullish trades when the market starts to move. So we've already determined that the market is at a +3. And if the market's at a +3, our allocation is going to be this right here. So we have no change in the market score. That tells us, let's go fill some slots. First slot I'm looking to fill was a -1. I'm going to choose a stock from the utility sector. I also want to do 1 + 1. I'm going to choose my favorite sector, Comm Services. Now, yes, I already have a very aggressive trade out there, but when I took a look, I also like consumer, but look at where I am on consumer. Yeah, I'm already pretty full on consumer. I could do tech, but remember, tech, I'm a little bit not as bullish on. So I said, hey, you know what? Let me go do my favorite sector, Comm Services, and that's fine. And then we're going to fill some middle slots with financial and materials. Now, materials was a -2. The question is, well, why didn't I put on a bearish trade? Well, if I take a look down here, I'm already full. I'm only allowed to have these, and I've already decided I like the utility sector as a short better than the materials sector. So I'm going to go look for a sideways in the materials sector to go ahead and fill that slot. So let's go and take a look at some of those potential trades out there. Many people are unfamiliar with exactly what proprietary trading is. Prop trading is when a private firm hires traders like you to trade with their capital. Those traders are paid a percentage of the profits that they generate for the firm. Profitable traders are awarded higher and higher levels of capital to trade so they can take bigger positions and make more money. We've been in business for over 25 years and we're one of the oldest prop firms based in the USA. If you would like to look into being a trader for Maverick, look in the video description below and click on the trader position to apply. First up, utilities looks like it is the weakest sector, so I want to put my most bearish trade in this sector. And you can see we've got a nice low base, and actually not even a low base. This is more of a descending triangle pattern. I mean, this is just a beautiful descending triangle pattern, likely to see a breakdown. We do have to always look at the scaling of this stock. This stock is not a fast mover. Take a look. It was at 36, moved down to 35. I mean, it is not a fast mover. We're probably going to move about a dollar every 2 weeks, maybe every 3 weeks. So we have to be realistic and say, what is this likely to move? I think we have to look at the 34-35 bear put spread. That is basically saying, okay, we think it's going to move down to 34 over the next 3 weeks, but that is about it. If you want to get a little bit more bearish, down to 33, I think that's a little optimistic on this one, but it's not unreasonable. It's not totally unreasonable on this one. It's just overly optimistic, but it's not unreasonable. I'm going to go with that 34-35 because I'm looking to fill a -1 slot. I'm not just making a trade because I feel like it. It's specifically for a slot. Next up, I'm looking for a +1 in Comm Services. Now, I always love to come across stocks like this because this is Snapchat. I'm older. I'm definitely not a Snapchat user. I've used it before. The filters are fun. And it looked really cool when they came out, but like even my kids that are, Gen X's, Gen Z's, they don't really use it anymore. Look, this is all just anecdotal evidence. I don't love this company, and I think this company is one of those companies that in 10 years, 20 years, we laugh about it. And we're, oh, you remember Snapchat? Where because they didn't make it. That is my opinion of Snapchat. But guess what? The chart? It is not the opinion of the chart right now. And in fact, the opinion of the chart right now is that it wants to go higher. This has been something I've worked on and worked on and worked on since I was a young trader. I no longer trade my opinion. There was no way I could make a trade that was different than my opinion on a company. If there was a company that had slighted me in any way, I could only go short. I could never go long. If there was a company that I liked their product, I could never go short. I could only go long. I now can have a different opinion on a company and make a totally different trade. This thing looks like it wants to go higher. I don't need to say, hey, I think it's going to go up to 20. For me, I'm looking at a +1. Remember, I'm looking to fill a slot. So my +1 slot is I'm going to be looking at this one here, the July 12th, 17.16 bull call spread. Take a look at that. I am not asking this to do much. As long as it is above 17 by July 12th, I get a max gain. And guess what? If it totally doesn't work out and it plunges below 16, I've got a very mild loss on this trade. That's all I'm asking for this one. If you want to be a little bit more aggressive, okay, go out to the July 19th, 16-18 bull call spread. That's going to be more around a +2 on that one. So that is Snapchat. Next up, financials. Last week we had a financial trade on American Express come due, and it nailed it. I mean, look at this. We had the 220, 230, 240 butterfly, and pretty much, now you didn't hit right in the middle, but pretty close to in the middle. Really nice gain on this one. We're going to continue with the sideways trades, and I'm looking at Marathon Digital. Now, Marathon Digital is a crypto company. They're a crypto mining company. I think they make computers for crypto miners. Like, it doesn't matter what they do. Take a look at the stock. So if you take a look at crypto in general, we are off of our highs. Bitcoin hit 71,000. It's down right around 60,000, 61,000, right at the bottom of a base. If I think crypto is going substantially lower, this stock probably goes lower. I don't think crypto is going lower because I think this market is healthy enough to keep all assets, even assets that aren't so good, higher. But I also don't think crypto is going to run anywhere. So if I can find a stock in this sector that's showing me a chart that's exactly what my outlook is on crypto, hey, you know what? I'll take this for a sideways trade. Now, this is what I love about options is you can't make a sideways trade on Bitcoin. But if you can find a correlated asset, then you can do this all day long, and you can see the stock is right about 20. The question is, where do you want to write your butterfly? I'm looking at writing either a short term next week, July 5th, but I think I've got my slot open for July 12th, so I'll be doing the 17, 20, 23 butterfly on Marathon. But either one is just fine, so that 20 is going to be that middle price of the butterfly. Moving on to materials. As I said earlier, the materials sector is one of the weaker sectors, but I didn't have any bearish trades left, so I filled it with a sideways trade. And here we have Barrick Gold. Gold has, again, plateaued. It's had a nice run. It hasn't gone anywhere for a while. Is there any reason for me to think that gold is going to be different than the rest of the market and make a huge run up or down? No. It gives me a great opportunity to come in here and do a sideways trade on gold. As you can see here, 18 looks to be the high, 16 looks to be the low. I'm going to be right in the middle of that 17. I think that is just a no-brainer on this one. Looking at the 16, 17, 18 butterfly, either go 1 week out, 2 weeks out. It's your call based on what you have available. Now that's all the trades I've got for you today that fit into my slots. If you guys have different slots, go find your trades like you usually do. If you have any trades you do want to share with the rest of the Maverick community, go to the website, log in, go to the members area, jump on that forum. We'd love to see that discussion. The market is mildly bullish, but consolidation is likely. The Friday failure just tells me it doesn't have the gas yet, but all of the charts are definitely pointing to the next run most likely being higher. Understand where we are in the economy, in the market cycle. We've had a big run. We've had a good year this year. And in fact, we're having one of the best election year cycles that we've had in like 70 years. So we're already doing much better than a normal election year. We're likely to see some consolidation. We're likely to see some back and filling before we ultimately move higher on the charts. Everyone have a great weekend. Take care. Stay safe. Goodbye, everyone.